gold, and I think a lot of people are missing this, is just now entering a new phase. It is just now entering a bull market. And I might even argue that this coming up is gold's first bull market. And I say this because, and again, I did a longer interview in March on this, it's on YouTube, but I say this because we've never had zero rates or negative real rates for this long. I think that the bond portion of all of these traditional asset managers' portfolio, okay, has now become irrelevant. So let's just say you have $200 trillion in assets out there, or even $100 trillion owned by pension funds, insurance companies, all these guys. And they have these 70-30 portfolios, right? So you're talking about 70% in 70 trillion in equity or assets. You've got 30 sitting in government bonds, just in that one cohort, right? Those bonds do not act as a hedge to their portfolio anymore. They're sitting at 50 basis points, right? They cannot go below zero. If we have a slowdown in the next few years and the Fed has to come in again and take rates negative in the front end and inject liquidity, those bonds will not appreciate to offset declines on the asset side of the portfolio, okay? They're in big trouble. And I've said this on Twitter, I've said it, a few times, that the biggest question that people will have, traditional asset managers in the 2020s, to answer is, what am I gonna do with all of those government bonds, or even corporate bonds that used to yield 5 that are now yielding 1.5 or 2 because they've gone out the risk spectrum. One of the things that they will do, and they have not done it yet, is to move into gold, okay? And so I don't know even if you're aware of this, but the institutional allocation to gold is less than 2% globally, okay? It cannot be over for gold before it has even started. So when you say Bitcoin and gold can't coexist, that makes no sense to me, because the move into gold hasn't happened yet. The move into Bitcoin will come after that. And I know some people will say, oh no, smart people will just jump over the gold step and they'll just go right to the Bitcoin, right? Well, it's too early for that. And also, the mentality of people in that traditional asset world, they're way far away from owning Bitcoin. I mean, I know from when you were, as a private equity / VC investor, you speak to some of these institutions, and there are many of them that are years and years away. We talk about the ones who are allocating now, who understand it now, and the institutions are coming, but it's the top 1%, right? 90% of them still, I just got a message today, it's not a proven valid technology. How many times have you heard of that? So those people are sitting with all of those bonds, okay? And from 1980 until today, every time we've had a slowdown, the bonds offset losses on their equities, okay? For the first time ever, that's over. And so why move to gold? Because they're gonna move 5% or 10% of their portfolio to gold, because gold does not have a limit on the upside when central banks are in balance sheet expansion mode. Right?
Why have so many institutions not put assets, like historically, right? So over the last 2, 5, 10 years, why have they kept that allocation at 2% or lower?
It's actually, it's pretty much zero for almost all of them. And then a few of them are like 5 and 5% or whatever. So it averages out to like 1 or 2. It's just like anything. Gold was pegged until 71, and it didn't exist as a market from 33 to 71. So it didn't trade, it was pegged. The 70s bull market in gold was really just about a release from a peg. I wouldn't even say it was, no one it was a trading asset. I don't think that people thought of, maybe they thought they'd have a little bit of it, but remember, it peaked in 1980, okay, and went into a bear market for 20 years. Gold price was declining for 20 years. So if there was somebody out there who thought gold should be in your portfolio in circa 1978, by 1988, he was proven wrong, or, and then by 98, he was dead on the ground. And then in 2000, I think it was 2000, you had the Bank of England sell the complete low, and authority, people just completely gave up on it. Of course, then, with the rise of China, gold then sort of took on a different, narrative. I mean, gold, like Bitcoin, has different narratives that drive it at different times. It's an incredible asset in that way. I would just say sort of historical predilection. Again, a big bear market, and then people sort of having done really well in equities, right? Equities, went sideways from 68 to 83, basically. So you made no money in equities for 15 years. But then look, since 1980, you've done great, and technology has come and changed everything, and driven returns in the equity market. So people haven't needed to look at gold, right? Also, in America, Americans are very comfortable with equity and with their currency. So we've never really been forced to think about non-dollar assets. We've never had to worry about inflation. When the dollar goes down, as it did from 2000 to 08, euro went from 80 to 160. People forget the dollar lost, whatever, 70, 80% of its value against the euro. And has, over periods of time, but it didn't hurt us. We saw the equity market benefited. But like in foreign countries, and especially in the EM, they do have currency problems, right? They do have weak monetary policy people who, do, quasi-illegal things, do actively debase their currencies. So for them, gold is more a part of their portfolio than for ours. I would say only the Germans and the Swiss really historically, and then the Chinese and the Indians. But, I just think amongst the really big portfolios globally, there just hasn't been an experience with it. And look, even just as an example, just look on Twitter. How many truly smart gold advocates are there? There aren't. I interviewed Tom Kaplan, and John Hathaway for Raoul Q4. Those are two super smart gold guys.